Good morning, everyone, and welcome to today's market update. Let's start with the key signals from Wall Street overnight. The three major indices closed virtually flat. The Nasdaq finished at 25,832.67, the S&P 500 at 7,483.24, and the Dow at 52,900.07, with almost zero change. But pre-market futures showed some divergence. The Nasdaq futures rose 0.46% to 29,896.25, the S&P futures edged up 0.15% to 7,557.50, while the Dow futures slipped 0.13% to 53,107. This suggests that tech stocks are seeing buying support ahead of today's open. On individual stocks, Nvidia edged up 0.22% to $194.83, while the QQQ ETF fell 0.22% to 712.60, indicating that heavyweight tech names remain directionless overall. Now let's look at some notable movers. AeroVironment surged 38.38% over the past 5 days, with a 10.7% gain in the last 2 sessions. The catalyst has been confirmed. The company secured a $500 million contract for counter-drone systems and beat revenue expectations. This stock falls under defense tech and unmanned systems, and upstream suppliers of semiconductors, sensors, and edge AI computing power may offer supply chain exploration value. Rivian jumped 19.19% over 5 days and 8.44% over 2 days, after second quarter deliveries exceeded expectations and the company raised its full-year outlook. On the cautionary side, POET Technologies plunged over 43% in the past month, and this decline has been confirmed. It is linked to insider leaks and customer order cancellations. While there is still geopolitical risk, we are not treating it as a core theme for now. AEHR dropped nearly 39% in the past month, but no clear catalyst has been verified, so we are also setting this aside. AKTS surged over 63% in the past month, but again, no recent news sources have been found to confirm the move, so it remains under review. Let's turn to the global macro picture. The 10-year U.S. Treasury yield stands at 4.47%, moving lower by 0.45%. This suggests that the market is pricing in a lower probability of a Fed rate hike in September, with liquidity conditions becoming marginally easier. The VIX Fear Index is at 16.38, up 3.61%, keeping sentiment in the normal but cautious range. While the VIX remains within the 15 to 25 normal band, the intraday rise of more than 2% indicates that the market is pricing in uncertainty ahead of the upcoming PMI data, with near-term volatility risk on the rise. The US dollar index is at 101.11, up 0.15%, but remains on the weak side. Over the past 7 days, it has edged up only 0.35%, still in a soft zone that provides support for emerging markets and commodities. WTI crude oil is trading at $68.15 per barrel, down 0.8%, as demand concerns and OPEC Plus production cut expectations continue to battle, keeping prices in a weak and volatile range. Spot gold is at $4,159.70 per ounce, down 0.24%. A weaker dollar and lower treasury yields provide medium-term support for gold, but short-term sentiment remains cautious. To sum up the global picture, the overall market bias is toward risk on, with the core driver being reduced expectations for further Fed tightening. However, a key failure condition to watch is if the 10-year yield breaks back above 4.5% and holds. That would reignite the liquidity tightening narrative and close the risk-on window. Now let's look at the Chinese yuan and the external environment for Chinese assets. The onshore yuan is at 6.7844 against the dollar, while the offshore rate is at 6.7987, both holding in a narrow range. Over the past 7 days, the offshore yuan has depreciated only slightly from 6.7741 to 6.7844, a move of just 0.15%, so short-term depreciation pressure remains manageable. With the yuan stable and no one-way depreciation trend, the direct drag on foreign capital inflows is limited. However, with the dollar index stabilizing near 101, foreign investors are still in a wait-and-see mode. On the trade and technology front, no new verified events have emerged recently. Market attention has shifted from trade tensions to Fed policy expectations and U.S. domestic economic data like non-farm payrolls and PMIs. For today's A-share market open, we expect a flat to slightly positive start. Pre-market gains in Nasdaq and S&P futures, along with lower Treasury yields, provide a positive tailwind. But the Shenzhen Composite and Chinext board saw significant pullbacks yesterday, so the risk of a lower open has been partially priced in. The failure condition to watch is if northbound capital outflows exceed 20 billion yuan in the first 30 minutes of trading, or if Nasdaq futures turn negative. For the A-share market itself, we expect the Shanghai Composite to trade in a narrow range with a slight upward bias today, while the Chinext board is likely to consolidate. The Shanghai Composite closed at 4,041 points yesterday, still trading within the 4,000 to 4,100 range, with the Shanghai 50 index up 0.91% providing support. If the Shanghai Composite breaks below 4,016 points, which was yesterday's low, it would shift into a weak consolidation mode. On the sector front, our focus remains on AI computing infrastructure, including optical communication, high-speed optical modules, and server power supplies. The reasoning is straightforward: NVIDIA's pre-market gain, the rise in Nasdaq futures, and lower bond yields are all boosting risk appetite, giving tech growth stocks short-term recovery momentum. Meanwhile, Coherent, a key laser supplier for high-speed optical modules, has fallen 20% over the past month but remains above its 200-day moving average. The bottleneck logic remains intact, so a near-term rebound is more likely than a further deep decline. The main risk to watch is in high-valuation small-cap theme stocks. While market sentiment is improving, the VIX is rising, and until trading volumes pick up significantly, small caps carry far more volatility risk than blue chips. The monthly drops of over 40% in POET and AEHR show that even stocks with bottleneck logic can suffer extreme drawdowns when fundamentals or order confirmations fall short. On northbound capital flows, we see a slightly higher probability of net inflows today. The macro conditions are favorable, with a weak dollar, falling bond yields, and a stable yuan. But we will need to confirm with actual data after the open. Let me close with one core takeaway. With U.S. bond yields falling, the dollar staying soft, and tech index futures rising, the risk on window remains open. A shared technology and AI infrastructure sectors are likely to outperform in the near term. Our probability assessment for today is 35% for an up day, 50% for a sideways move, and 15% for a decline.